Hey traders, Parker here with another indicator. Today I'm going to introduce you to the better Darvas box indicator. Basically, what makes this one better than the regular one is initially you have the middle line of between the high and the low of the range. And then I added the targeting system. I was very conservative with the targeting system. You have your range high, you have your stop loss, you have your target 1, target 2, and target 3. And you have your previous range as well. And that's what you're getting with this cloud right here. And this would be the high of the range, the mid of the range, and then that would be the low of the previous range. And that's what the targeting system is really working off of. And this is your current range right here. But the system is anticipatory, so before it breaks the range of the previous box, it'll actually snap on the targeting system, whether it be high or low. Right now we're looking at WWR on, this is a, what day was this? This is back in 2020, and it really ran on this day. And we can look back to the previous day when it ran, and you can see how with having this box on here, the previous box on here really helped out, because once it broke down below, it snapped right back into this box. There's your mid, and it broke above the anchor VWAP also that I added into it here as well. And you could have rolled it up from there and using this range high right here as your entry, and it would have gave you a stop loss as well. And that whole targeting system, same situation here or any of these other places as well. And this gave you a second chance to get back in. You could have got in right here on this lower part of the range. And let's take mine off, and let's put the regular Darvas box on, and we can see how we can compare the two. And this is basically what you get with the Thinkorswim regular Darvas box. You get this range, and that's pretty much it. You get these arrows when it breaks above the range. And with Thinkorswim, with the regular Darvas box, if the high breaks the range, you immediately get a new range high. And that to me wasn't really helpful. So with mine, you won't get a new range high unless the close breaks above the range high. And it would just stay or fluctuate within this range, or the close breaks below the range low. So the stock got halted on this day. I'm going to put mine back on, and I am going to get rid of those. And you can see it right here. It stayed in that range. With the regular Darvas box, you saw the red line that was up here showing that the high broke the old range high. And I'm going to press forward because it got halted on this day. And one of the other features of the Darvas Darvas box, I'm going to take it off of that, and we're going to look at the scanner. And this was our results for the scan when you scanned it with the buy signal. You don't have to have my indicator to do this. You just put the regular Darvas box in here, and you just go to the buy signal for the regular Darvas box, and you say is true within 1 bar. If you want to use Thinkorswim's regular Darvas box. And we'll go to one of the stocks for today, and this is AT&T. It had a signal for today. There's your signal, and it's breaking above this box right here. Here's your signal, that cyan arrow, your targets, range high, stop, everything right there. And MRK was another one. Here's your signal right here. And right now you're looking for, you can get in tomorrow or whatever and use this as your stop loss. But you could have got in right here if you was watching this stock when it crossed back up into the box or into the range. Because you had your breakdown, but it had strong volume pushing it back into the range. So we can go and look at another one. Really looking. Let's find one with great percentage run. DRCT. DRCT. That's not one of the best examples. Let's go back with volume. Lumen. LUMN. Here's your break above, and when I scanned it earlier, I put an alert in there. So if it breaks above 1140, give me an alert, and I'll come back and look at the stock and see if it's gonna be worth it. But right now, as you can see, it has this large gap area, so it really be a gap and go. If you play it, or if I play it tomorrow, I'll be really looking at the gap. Would it been staying in this gap area and filling this gap at 12.30, or possibly taking it to $12 or more. So, and that's basically it with the better Darvas box indicator. I really appreciate you guys taking the time out to watch the videos. I wanted to show you it playing out, but Thinkorswim could be acting kind of finicky. So let's break it down to a lower time frame, 3-day 5. And this stock got halted. So I'm going to press it forward a little bit, and then I'm going to attempt to let it play out. But this is basically the end of the video. But I really wanted to show the box playing out. And you got a breakdown right there. And this stock turned around. I'm trying to get to there. And I'm going to switch the time frame to a tick chart. And hopefully it loads and plays out. And like I said, it's anticipatory. So it has a invisible line here. So it has to be within 10% of the lower range, or 10% of the high range for the targeting system to snap into place to anticipate a breakdown or a break above. And like I said, this is basically in a video. I'm gonna let it play for a little bit just so you can see the see how the targeting system works and the Darvas big system itself work out. But if you haven't already, please like and subscribe and share the video if you found this helpful. Leave me some comments or some feedbacks. Anything that you think I can do better. The link in the description will be where you can find the actual indicator, and shoot me an email if you have anything else you want to ask about this, or just leave it in the comment section. Thanks. I wish you well in your trading.